Thursday, May 4th, 2023, Monaco 64, home of alternative economics and contrarian views. So we're going to look at the concept of Goldilocks as it pertains to the economy and the markets today. I think Goldilocks is in critical condition. I don't think Goldilocks will survive. And that's why I've been warning or telling people that they need a little bit of gold and silver to protect themselves financially, of course, because things are getting really crazy out there in terms of the financial system. And a lot of people are still completely oblivious to it because the powers that be are trying to maintain a semblance of normalcy. Even yesterday, for example, during his press conference, this is what Jay Powell said. The U.S. banking system is sound and resilient. And after the stock market closed yesterday, we saw PacWest, a California bank, drop more than 50%. So there's another bank failing here. California lender is latest to seek financial lifeline amid worst industry crisis since 2008. So before we go into the concept of Goldilocks and the loss of faith and confidence in the system, just wanted to give a shout out to ITM Trading in the US. They're one of my precious metals affiliates. The details of how to get in touch with them are below in the description. They'll help you. Try to formulate a formula to basically protect your wealth with precious metals and maybe even thrive in the current environment, in the current crisis. There's always opportunity in any kind of environment. And check them out. It's below in the description. So the concept of Goldilocks, as it pertains to the markets, the economy, well, back in the, let's say, 2000s, early 2000s, up until 2008, and even after 08, when they managed to salvage the system, there's always talk of the Goldilocks economy. I think the 90s was a representation of that. From, let's say, 93, 94 to the year 2000, we had very controlled inflation. You had a stock market that was doing well. You had low unemployment. Everything was honky-dory. The fiscal situation wasn't that bad. There weren't big deficits. So, yes, it was a Goldilocks economy, Goldilocks markets. And they've been trying to recreate that ever since. And I don't think they've succeeded very well because ever since the 08 crisis, the only reason we've seen economic growth or positive GDP is because of huge deficit spending. The only reason we've seen paper assets like the stock market, the bond markets, real estate values go up is because the central banks have been printing money through QE, keeping rates artificially low, which is something they didn't have to do up until 2000. Things were just evolving fairly organically. But I think 08 was the death knell for Goldilocks. And right now, Goldilocks is almost dead. And what happens in an environment where there's no Goldilocks, where there's no stability, monetary, economically? Well, think of Venezuela, think of Lebanon, think of Argentina, think of Brazil maybe 20, 30 years ago, because right now I guess the Brazilian economy isn't doing that bad. Think of, where else can we think of? Zimbabwe. Yeah, all these countries that have done the wrong thing, they're experiencing a lot of trouble. And I'm not saying the US or the UK or Western Europe is going to go full Zimbabwe or full Venezuela, but that's where I see things. And you might argue that this is being done by design to bring down the smaller banks, regional banks, and consolidate power at JP Morgan and the big, too big to fail banks. That might be so. Or maybe Jay Powell is just, and his cohorts at the Fed and at the Treasury are just incompetent. Maybe they don't realize that the system is almost on its last legs, and that the faith and confidence evaporating could evaporate all the way to JP Morgan. JP Morgan would be, of course, the last domino to fall. So what do you do in a situation where Goldilocks is gone? Well, I've been trying to tell people about this since 2002 because I knew the system, a fiat currency system, mathematically can't go on forever because it's a system where you need a lot of debt and you need to keep the debt growing or else everything implodes. So we are at the crossroads, and overnight, of course, gold actually did very well. It reached an all-time high through some markets. And why do I say that? Well, because gold is traded really like a foreign exchange, like a currency. So it's very difficult to pinpoint the high or the low. Yes, there are the futures market, but I saw in my system last night when the futures reopened that the spot price on the system that I follow got up to 2,082. I saw that on COMEX, the front month futures, which is the June future, got up to 2,085. But the May contract, which is the spot contract, got up to 2,072. So the one to look at is, of course, the spot contract because that's what people look at in terms of the all-time highs. And so we're going to look today why I think, and this is not just a dollar thing, why I think all the fiat currencies are approaching their final precipice, so to speak, the final frontier in terms of losing value versus gold. I've spoken about this before. Since 1971, when Nixon detached the whole world's monetary system from gold, from that imperfect gold exchange Bretton Woods system, the dollar's gone down 98% versus gold. The pound's gone down 99%. The currency that has done the best is the Swiss franc. So I think only down 91, but I think we're down to our last 1 or 2%. And it's going to be a wild ride. And I think you need to hold on to your gold and silver for dear life. And why do I say that? Well, because it's going to be very volatile, as you'll see when we look at the markets today. So I think that's where we're at. Are they really clever enough to engineer a collapse of just certain banks and keep the other ones alive? I think that's what a lot of people think they're trying to do. But what if they can't? What if people lose faith and confidence in the whole system, even in JP Morgan? That would be one for the books. And they might not be able to put the genie back in the bottle, so to speak. Let's quickly look at the markets then. This morning, it's 8:23 a.m. And I think the markets are becoming more and more not irrelevant, but you need to keep an eye on the currencies versus real money, i.e. gold and silver. The more they drop against gold and silver, the more irrelevant stocks, bonds, and everything becomes, because It means that the anchor of value is just getting torn out of the system. And people are realizing that the paper system is dying. But anyway, we've got spot gold now. Things have calmed down. That's why they've... another thing that I learned through my career in the City of London, when I started out in the futures market in 1993, markets closed. But then eventually the futures exchanges became a 24-hour thing. And I think the regulators pushed that. Regulators, I mean CFTC, the Fed, the Treasury. And why did they push that? Well, because the markets were becoming more and more globalized and they needed to control it with the futures. And that's why the futures markets, nowadays, they only close for an hour. And why do I think, what's the purpose of that? They tell us is to make it convenient for investors. But that might be true, but I think it's also because they can control markets before major investors come in the US. They can control it overnight by tinkering with it. And that's one of the purposes, I think, of the futures market, to control and manipulate things. So here we have, I think it was the fifth bank now that's going to go under, PacWest. It's not going to be the last one. And things have calmed down. I would say, yeah, JP Morgan is very active for the Treasury and the Fed in the futures market. So anyway, we've got spot gold at $2,035. It's down $4. Yes, on my system, the high is $2,085. This is a spot price. So the low is right here. So we've come off a little bit. Silver is at $25.50, down about 6 cents. The high has been $25.91. And yes, it's very encouraging, I think, for precious metals, and unfortunately not for the whole system, that gold and silver have been doing very well in the last few days with all the news of bank collapses. And have you thought about the fact that ever since the Fed hiked rates about a year ago from almost 0 to now 5.25, gold is actually almost making new highs. We were told by everyone, well, gold is going to collapse because the Fed is going to raise rates. And now that the Fed is probably on its last legs in terms of tightening, gold is making an all-time high. So there's a lot of potential, as I said, for the precious metals still. Not just potential, but it's where you need to be, in my opinion. So what about the stock market? The stock market, of course, has had a rough 2 days, especially those banking indices, the KBW, which is the bigger regional banks, but also the KRE. They've hit they've hit their lows for the year. They've gone below the low from March, and they're fast approaching the March 2020 lows. So the Dow futures down 80 points. NASDAQ is up 3, and the S&P 500 is down 8, so fairly quiet right now. The currencies are pretty steady as well. The dollar has been weakening somewhat, but yeah, don't be fooled by that, because gold is making all-time highs in Japanese yen, in Aussie dollars, despite the rate hike from the RBA. We are approaching all-time highs in sterling, and we are approaching all-time highs in dollars. So this is a currency collapse for all the fiat currency system. That's what you need to keep in mind. So let's skip to the commodities. Yeah, commodities markets, they're suffering, the general commodities. And why is that? Well, because there's fear of collapse, in my opinion, when the whole banking sector is in peril. that hurts. That will hurt the economy. There will be a credit crunch unless the Fed steps in and starts printing a few $1 trillion pronto. So yeah, we've got crude oil now. WTI is below $70. It's at 69.05. It's up 0.75% overnight. Brent, it's at $73. It's up 1%. Platinum is down $7 at 1,050. High grade copper is up 0.5% at 386. So we're going to finish off and quickly look at the bond market, the treasury market. So yeah, the 10-year yield is continuing to drop. I think we've gone up to like 360 recently, and now it's at 336. So that's a bad sign as well. People are concerned about things. They think treasuries are safe, even though a huge part of the problem with the banking collapse is that they bought treasuries. So go figure. So the 2-year is down 8 basis points at 385. So the market is definitely pricing in a few rate cuts by the end of the year now. And we'll have to see what happens in terms of the Fed's balance sheet as well, I would say. And this could all change, though, over this coming weekend. It could get crazy. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.